Welcome to the July edition of Around the Markets. I'm Mark, and we will start with our pivot charts of the S&P 500 and the Nasdaq 100. Next, we will re-examine the crude oil chart and the ratio chart between the GDX and the SIL. And finally, we focus on the main markets, the main indices of Belgium, France, Germany, and Spain. So, let's get started. The S&P 500. Last month, we saw a test of the break over the 5180 pivot. Since then, the index continues its upward move. Perhaps the 162 level of this Fibonacci structure could become a target. The first intraday support is around 54.50, with the next support around 53.50. The 5180 level is the main support for the midterm period. The Nasdaq 100, the same movement as the S&P 500. The Nasdaq 100 is hitting the ceiling of that channel. Intraday support is, I'll zoom in, take the rectangle. The first intraday zoom is around the 19,500. The second intraday support is around 18,900. And of course, the support zone of 18,000 remains our main midterm support. Crude oil. We discussed a possible entry when we saw that low in the RSI. Short term, I'll zoom in. Short term, if the RSI stays above 60, you can hold. What is a possible target? I'll take another study. When looking at the long-term monthly chart, where we see an important pivot at 90. Now, looking at a 5-year daily chart, I seek to find what I call an equilibrium trend line that I'll check through a parallel line. So let me show a few equilibrium lines by starting at a new cycle. So I'll start from the low of 2020. I will get my pencil and my software Transtock. I'll take the high of this gap. I will start here and I'll draw a line something like this. And I notice that this line will give some resistance and also give supports. Next step is to create a parallel line. I'll move this parallel line to some top of bottom like this. And I notice that this line also gives supports. So that's okay. Next cycle starts from the top of 2022 till now. What I'll try to do is, when we see a next cycle, I'll try to use the same equilibrium line, so this line, and I will start at this line. So again, I click on my pencil and I will start here to look somewhere where I can start my line. I notice here something like this, and I will draw my line something like, I could draw something like this, because I notice here resistance, 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 a little bit of support, and also here support. Again, I can create a parallel line like this. I can move it a little bit like this here, giving support. But now I will move this line to the tops, something like this. And also here, this line is giving support and resistance. Now, last month, we saw the crude price break through a second time. The first time was in April. Now in June, it break a second time through this, yeah, through this parallel line. So yeah, I need to start a new upward equilibrium. So I grab my pencil. As I told you, I try to seek always the midpoint somewhere in this, the endpoint of a new trend. Um, so I'll try to seek, I notice here a little bit of support resistance. I will try to use this, a line draw like this, and maybe we can draw, yeah, we can do like this. I will draw the line like this. I will try to create a parallel line. Also here I noticed that this line is giving some good support resistance. So yeah, also short term, the target for crude oil is, yeah, if it's moving upwards, then that 90 level will give some resistance to the crude oil price. If it breaks through, that would be very, very nice. So that's, yeah, that key level around 90 becomes, yeah, very, very important. Next is the GDX-SIL ratio. We are getting the tests of that important zone around 1.10. So now I want to see the curve drop back, so we start to accumulate silver and good gold stocks. Focusing on Europe, I'll start with the BEL 20, the main index of Belgium, one of the weakest indices in Europe for the last 5 years. Recently, we saw some improvements, but we need to stay above that 3,800, 3,850 level. The 200-day moving average is pointing up again, which is good, of course, but the 50-day moving average is losing a little power. This is logical because, yeah, we have a lot of resistance around the 4,050 and here that 4,200 level, which is still the COVID top. Next, the CAC 40. We saw some weakness, and the results of the European election caused a drop of 6 to 7% to close the gap from January 2024. The main support held, and as always, this is a good opportunity to buy again. Below that level, I don't like it, and therefore I will extend this support zone around 7,100. Of course, if we fail and we fall below the 6,800 level, that's really a no-go. Next, Germany's DAX. It's performing okay, but you see the index falls below its 50 days moving average. In the past, this average works really well. So I hope to see a move soon back above this 50-day moving average. If not, the 17,600 and the, yeah, we could say the 17,000 zones are the next support level. We also see the 200 days moving average around the same level as this. So we have a cluster of two different technical analyses. So 17,000 is a really important zone. And finally, the IBEX 35, the main index of Spain, finally broke the COVID top in March 2024. Like the DAX, the IBEX falls below his 50-day moving average. Zooming in to find support, I will use again the rectangle, the green rectangle. So we notice a first support zone around 10,800, next support zone around 10,500. Of course, this bigger rectangle is the COVID top, is a really important support zone. If we try to locate and target, we'll use a long-term chart of 20 years, excuse me, and we'll notice an important red zone around 12,000. So we have an important target, an important resistance key level at 12,000. Voila! Thanks for watching this monthly review. For more updates, please check out our weekly market spotlights. Don't forget to subscribe and hit the notification bell to stay informed. This way you get the latest insight as soon as they come out and stay ahead of major market trends. See you in the next video.